Today, we are discussing rollovers for business startups, or ROBS. In short, ROBS will teach you how to use your retirement funds, tax-deferred, penalty, and debt-free. This innovative resource has become the fastest growing form of funding to help someone start, acquire, or grow a business. Two ROBS experts have created a series of comprehensive educational videos to help you become an educated and successful entrepreneur. The first, Larry Carnell, is the National Award-winning Entrepreneur of the Year, business and franchise expert, and Vice President of Benetrends Financial, the company that discovered this legal pathway in 1983. Carnell is recognized as one of the country's foremost ROBS experts and is credited with helping introduce this creative funding, wealth-building protection program. Joining Carnell is CPA Gary Bodie. Bodie holds a master's degree in accountancy and is considered a leading national expert on ROBS structures. He is also a business lecturer and contributing author on ROBS and C Corporation structures, which can help maximize your exit strategy benefits while minimizing your taxes. In addition, Bodie runs his own practice where he advises and works with entrepreneurs with ROBS-structured businesses across the United States. How can you use a ROBS program to minimize business failure?
You know, I talk to a lot of people. I've helped over 8,000 people buy, sell, fund, and exit their businesses. The biggest obstacle is not funding. The biggest obstacle is managing fear and anxiety. A lot of people would like to own their own destiny. They're just concerned about failure. Well, a great appeal to using ROBS is that you're actually increasing your potential of success. You know, to be quite direct, you cannot eliminate risk. You cannot eliminate the potential of risk. What you can do is minimize it. You know, I often joke to people, if you never want to get divorced, I have a solution: never get married. But then you miss out a lot of benefits if you pick the right person. Well, first of all, picking the right business is incredibly important. But once you do so, how you structure that business, how you fund that business, who you partner with to be your advisor through that journey. And let me assure you, when you have a ROBS program, you're going to have a relationship with somebody oftentimes for the rest of your life. 99% of our clients often stay with us for the life of the business. So it's important to think about how you structure it. A 20-year study, as we discussed in an earlier video, by the Department of Labor, found that 50% of people using traditional funding and many other types of structures were out of business in 5 years. To be quite direct, debt is not a friend to a business owner. But ourselves and even many other people in the industry have found a dramatic increase, as much as up to 90% of people using retirement asset funding or the ROBS program were still in business 5 years later. The question is, why is that happening? Well, anytime you reduce debt, you shorten your time to profitability. So keep in mind, for every $1,000 you have in debt, it's not unusual to have to generate $5,000 to $8,000 in revenue to produce enough profit to pay for $1,000 in debt. The other thing that they found was that people that use this program, because they had no debt, they had often thousands of dollars more every month to use to market and advertise their business. So rather than struggling getting the revenue to grow, they actually saw an acceleration of revenue. Of course, in every business, you have fixed expenses. You know, if you have a business with $4,000 in rent, utilities, you have to have a certain amount of labor. Before you make $1, you got to have enough profits to pay for those fixed expenses. And debt is a fixed expense. So if you got thousands of dollars in debt, before you even make your first dollar, you got to get your revenue past that break-even point. And I often use the analogy of an aircraft carrier. You know, people often are downsizing. They say, well, I can coast, I've got 6 months severance. That's one of the biggest mistakes business owners make. They need to take that time to get your business off the deck. You don't coast down to the end of the 6-month severance and then push down on the throttle. When you do that on an aircraft carrier, you're going to be in the ocean. What you need to do is take that time to find the right business as quickly as possible. Conserve the savings that you have that you need for personal living expenses. Get your business at a certain altitude to get to a point of break even but then it takes you even longer to get to a point of income replacement. So anything that you do to accelerate that and decrease the expenses that will drag your business down will be a benefit to you. But what are you finding? You know, you've been working with business owners forever.
The same thing. Lower initial costs to service, freeing up cash flow. A lot of clients don't really do good financial projections, and so I think there's a trap there if you're not using the ROBS technique. With the ROBS technique, you can get away with a little bit less due diligence because it's tax-free. But what I'm finding is that people want to control their own destiny. They want, they're using their own retirement funds, which to me would be a huge, huge incentive. And they want to be in a business that they really enjoy. And a lot of the new generation of ROBS clients are really looking for that. They don't want to do corporate America anymore. They want to do something that they enjoy doing. They like to feel like they're in control. And I think ROBS really kind of helps them along in that aspect.
The combination of picking the right business,
Right.
having the right work ethic, and minimizing your debt are all keys to success. And with that being said, thanks again, Gary.
Okay.
Appreciate it.
Okay.